Welcome, everybody. Here is the No Shill Zone. It's a different day this week, but Ben and I got together and we said, you know what, we got to get you guys the information that we know you enjoy, the data, the non-biased BS. So here we are with the information. How you doing, Ben?
Pretty good. I'm a little under the weather, actually. I think I caught something while I was out of town, which is, by the way, the reason we're doing it on Tuesday is my fault. I was traveling yesterday, so I wasn't able to do it. But yeah, a little bit under the weather, but I'll do the best I can to try to enunciate.
A trooper, man. Thank you. So I have a few questions that I was kind of thinking that we really haven't touched on. And let's start with a little crypto action, and then we'll maybe move to macro stocks and the overall stock market, maybe some commodities. I think it's worth talking about oil today as it kind of is starting to approach that $90 a barrel level and what it means for inflation. But going back to stocks, one of the things that I feel like a lot of, or I should say crypto, one of the things that I feel a lot of people aren't discussing anymore, and they've kind of brushed it under the rug, is the allegations that the SEC made against Binance. And I was just curious. I mean, do you think it's a total BS kind of thing against Binance? Do you think there's something there? Is it Gary Gensler's kind of vendetta? I mean, what are your thoughts on that? I mean, I know it's total speculation, right? You and I don't have inside scoops or anything.
Yeah, I mean, honestly, I really don't know. There's been all sorts of stuff said over the years about various crypto exchanges. Some of them came true, some of them did not. I will say, I don't. While I think both of us can agree that during a tightening cycle, it will expose fraud, right? It'll expose fraudulent actors that's there, but it's also impossible to know who those actors are ahead of time. So, sort of the view I take is I don't know is honestly the best answer I could give you. I don't know who the fraudulent actors are. I will say I don't necessarily root for any of them to go down. I would rather be optimistic about it and say, I hope that everything is as it seems. I also think that it is possible that it's easy to assign narratives to price action going down, right? Like we know some of these exchange tokens have gone down in price, but it's also because it's a bear market, right? And maybe it doesn't have to be anything more than that. But I mean, sort of the flip argument, and I've kind of said this before, and it is probably not the most popular view, but I don't necessarily think that exchange tokens in and of themselves are, a vital part of the cryptoverse, right? Like a crypto exchange can operate without a native token if they want to, right? It's not something that they have to have or anything like that. So I don't really know is the answer I'll give you. I've seen sort of both sides, and I want to choose to be more optimistic, but
I agree.
We've also seen what happened with some other ones, right? We saw what happened with FTX. So to go into it assuming we know for sure everything is as it seems might be a little bit ignorant, but hopefully as many companies as can survive the bear market. What are your views?
Yeah, no, I mean, I'm kind of in your camp. I hope it's nothing. It's just, it does stick in my brain a little bit that, you could take the narrative that, hey, the SEC just wants to destroy the crypto market. I honestly don't really believe that. I think they really want to regulate it, and I think they want to be looked at as doing things the right way. And so it does irk me a little bit that it's, that these allegations were made, because it's like there's got to be, they wouldn't just pull them out of thin air, but hopefully CZ has a good explanation and can kind of deal with it and make things right. Because I do think overall, the crypto market has taken a lot of shots, right? Whether it's FTX, whether it's these other things, and Binance could arguably be the biggest one. So you do hope it is nothing big there under the rug. And I think as investors, it's one of the reasons why you would probably agree that the safety is probably with Bitcoin at this point in this type of environment we're in, with possible issues like that, but also with the way liquidity is in the system.
Yeah, and I mean, I think that's been the way for basically since 2022 started, is that the relative safety within crypto is in Bitcoin, right? Like if you have exposure to crypto, if you want exposure, Bitcoin's probably going to outperform most everything else. And even things like the BNB Bitcoin valuation have basically just been in a downtrend for a while. I mean, it did spike up. I believe it topped out late last year, actually around the FTX collapse. But ever since then, it has been in a downtrend. So I hope for the sake of the cryptoverse, there's nothing wrong there. Garrett,
Oh, sorry. I was just going to show, as long as we're doing this, let me just show my chart on Binance and we could
Sure.
just take a quick look here. And so I will say that, listen, a lot of the crypto charts don't look very good right now, and Binance is no different. Basically, what we have here, we had this little bit of a consolidation and we broke below it. Look at how it retraced right there. This was on that grayscale news, how it went up. And this is the amazing thing about charts, is that you have this pivot low here, then it touched right here, and then it broke, and then it seems to always come back to that line to kind of retest. It's almost like it's home base, if you will, and then it kind of continues down here. And you are making a little bit of a bearish pattern again. So this, by the way, this doesn't tell us anything in regards to whether or not those allegations are true or not. It just tells us what the overall crypto market is behaving like right now, which, if it does break down, the next logical stop is going to be the low from 2022, which is around 185 bucks on Binance.
Right. And I mean, to be clear, whether they're true or not doesn't mean that the token itself isn't bearish, right? I mean,
right, exactly.
Yeah, I mean, I still am relatively bearish on the altcoin market, and that includes exchange tokens like BNB, probably through the end of this year, is my guess. Is kind of when they might finally start to turn back around. So I would suspect that, like, it's more likely to go down than up over the next few months. But I don't, whether the allegations are true or not, I have no idea. I would like your opinion on something, because this is something we talked about a lot as well. And actually, why don't we go ahead and jump into it? I want to talk about oil, but I also want to talk about the dollar, because both of them are sort of making these very quick gains. I mean, the oil keeps going up, and as we said before, there haven't really been any crazy headlines, but it just keeps pushing higher. Do you think it's going to pull? Do you think it's going to sort of maybe lead to an economic slowdown if inflation starts to continue to go back up and the Fed's forced to continue to go higher for longer?
I think that's one of the major risks here, is that you have a scenario where the Fed has been trying to slow the economy to kind of bring down inflation. But as this narrative of soft landing or no landing has taken off, and we see the employment market, or the jobs market, remain relatively strong, then you're now seeing this kind of situation where we're starting to see commodities move back up, which is then going to make it harder for the Fed to print money or even lower interest rates. So it's really like this double-edged sword of where it's you get things down to a point and you do it the right. Like, think about that. Think about how warped this is, Ben. It's like the Fed is trying to do this perfect landing, and by doing a perfect landing, they're going to push oil up, which will then make it an imperfect landing by pushing up inflation, which will then make them have to be tighter for longer.
The path to a hard landing always involves thinking we get a soft landing.
Right.
Exactly.
Yeah.
And I think, there's some risk there, because oil continues to go up. And by the way, the dollar is on a tear. And I think the reason why it's sort of notable is that it took out the high from May of 2023. And so that's obviously likely going to turn some heads. Like, from a macro structure, it is a higher high. We still need to see a macro higher low. But I think the reason why that's an issue, and we've talked about this as well for several months, is that you can have oil rally into a recession just like you can have the dollar rally into a recession. And I think that's sort of the issue, is if the dollar continues this rally, then that could suck liquidity out of the system and lead to sort of the altcoin market getting hit pretty hard. And I think until it makes its way to the equity verse, to the sort of the equity side of things, the Fed's not going to care.
Yeah. I agree. And I'm just moving back now on my charts, because I remember we discussed this at one point on oil, the massive run that oil had from 2007 all the way into 2008, right? Into mid to late 2008. And I think what's interesting here is, if you go back to the comments by not Jerome Powell, who was the one? Bernanke. So Bernanke, going into this period, it was also expected that the Fed, I remember him vividly. I looked this up. He was saying, it looks like we're going to avoid a recession. We're not pricing in a recession. And you saw oil make one of the most powerful moves to the upside before, guess what? We had a major recession, and then oil ended up collapsing. So, I think one of the amazing things about price action is that it repeats over and over again in different environments, but the same things kind of are behind it, which is human emotion, right? I mean, the same kind of thought process. Hey, we're going to land this plane perfectly on the runway. So it causes this, then the economy is going to speed up and everything's going to be great. Oil rips higher. And then when the rug gets pulled, essentially, you see the very fast collapse. And so it makes me think that a very similar thing is going on here. as we move up. We haven't obviously had the type of run that we did back then yet, but it is worth keeping an eye on.
Yeah, if you look at rate probabilities for the Fed, I mean, at least what the bond market is thinking, they're still calling for 95% chance of staying as we are at 5.5% in this month in September. But you can also see that the market is still expecting rate cuts in May of 2024. I think the issue is if oil keeps going up and all those previous headwinds to CPI become tailwinds, right? Because if you think back, oil peaked out a little over a year ago. So the reference point for CPI, when you look at oil, is going lower while the price of oil is going higher in terms of how CPI is calculated, right? So
Yeah.
I would argue that there's this risk here of the market starting to price in potentially another rate hike, right? Going up to 5.75 or even 6%. Now, that's not to say that has to happen, right? I would even argue that there might be a scenario where the market simply thinking that it happens is enough to sort of cause the market to finally cave to the Fed.
Do you,
Go ahead.
Sorry, I was just going to say, like, so let's say that oil continues to move up and we see a weakening in the jobs market, the labor market. Do you think the Fed is right now more inclined to say, forget the labor market, we got to still raise rates? Or like essentially, if you get into a situation where you have stagflation, right? Does the Fed cave under stagflation, or do they stay strong and continue to fight the inflationary side of that?
That's a good question. I mean, I don't really think they need to raise anymore. My guess is they already are at sufficiently restrictive territory, but it's just, are they willing to hold them at that level for a longer period of time? I think that's the harder issue, because it's not just high rates, it's higher for longer. So my guess is that if the labor market were to show some weakness now, because it hasn't really yet. I mean, we did get 3.8%, I believe, in the last unemployment number, but that's still relatively low. I mean, it's still less than 4%. If we were to start printing in the 4%, I think we would likely see the Fed stay at 5.5. But I don't really get the sense that they're going to lower rates just because the labor market shows some softening. I mean, that's what Powell wants. They
Right.
want the labor market to soften up. They want to sort of bring down wage inflation. This is what they want. And up until now, it's been the easiest thing in the world to manage, because if they know they want a looser labor market and the labor market is secularly tight and inflation is high, then they only have one thing to do. That's QT and higher interest rates.
That's right.
Once we start to see a little bit of weakness in the labor market, I still think they're going to stay. I think they're going to sort of stick with their resolve longer than most people would like.
Yeah, and I just threw up this chart. I thought this one was an interesting one, showing the velocity of delinquencies on credit cards. That while we're not at levels that led us into the financial recession back in 08, 09, where the vertical nature of this is somewhat alarming. We didn't see that vertical nature until we were already in recession, basically over here in 08. Granted, we're coming from a much lower point, but I think, again, for me at least, this is something that is worth keeping an eye on, where you're now at delinquency rates that we haven't seen since about 2012. And if that continues to rocket higher, I think it tells us a couple things. Number one, it does tell us that people are spending down the savings in COVID, right? We know that credit card debt is $1 trillion plus now. Delinquency rates are rising, auto loan delinquencies, all of these things are kind of spiking. And so there is stress. There's no doubt. And we've seen it in the banking system with Silicon Valley Bank, but there's no doubt that there is stress being caused in the economy. Again, the question is, at what point does the Fed say, okay, enough's enough? Do we need to see the labor market really go to shit, essentially, or not?
Yeah, and I mean, so far we haven't really seen that. This is sort of normalizing historical performance of some recession risk indicators, potentially like job openings, job quits, and for the entire labor market, the only thing that's really screaming recession is the quick drop in job openings, right? The unemployment rate doesn't say recession, job quits doesn't say recession, initial claims doesn't say recession, and continued claims, it doesn't yet say recession. So I think, but again, it would make sense that the recession risk would go up first and be noticeable in job openings, right? Like, it would make sense that it would start there, because if the job openings are quickly going down, then it's only a matter of time before that filters into other things, right? Like initial claims, like continued claims. If people can't find a job, you think about it today, right? Like if someone loses a job, they've been very able at this point for the last couple of years to go out and find a new job.
Mm.
But as the job openings continues to go down, which historically we've seen have potentially dropped below or starting to drop below trend, that I think is sort of an indicator that, hey, the recession risk is now hitting job openings. It's likely going to start hitting, continued claims next, and then initial claims. And then lastly, the unemployment rate. And so, yeah, I mean, I think there are signs of weakening. You can see that real gross domestic income is starting to put out some warning signs as well. But there's still a lot of sectors that haven't yet, right? Like, imports of goods and services and our real GDP. Real GDP, the Atlanta Fed was calling for 5.9%, I believe. Maybe they've updated it now to be a little bit more in line with reasonable expectations. But at last I looked, it was at 5.9. So now they've reduced it to 5.6. Maybe 5.9% was the sort of the top for the no landing scenario.
Yeah, I mean that's some incredible growth right there, and you have that type of growth. It's hard to imagine inflation's coming down much.
Right. Yeah, exactly. So that's going to become still a continued risk. Gareth, I'm curious, where do we stand? Where do you think we stand on Bitcoin right now? Because that's obviously the talk of the town these days. Bitcoin is still kind of slowly fading,
Yeah, and I'd love to hear your kind of views afterwards on dominance and stuff like that. What we're seeing with the dominance, but for me, again, this is just replicating, unfortunately, the bearish price action we've seen. I love drawing the comparison. Here you had Ripple's news and the pop, and then in one day we reversed that entire move. Here it was a little like it's bearish to reverse a move in one day. Like that's as bearish as you can get. When you go up like that on news and you reverse it in one day, that's like 90% bearish. Here we had the grayscale news, right? And we reversed it in 2 days. All right, so that's a slightly less bearish, but it's still heavily bearish price action. And so essentially what you want to see is when good news comes out, you want to see the pop, which is what we get, right? But then you want to see more like this kind of action where it's digesting the news. It's not reversing the news 100%. So the price action is still bearish to me. To me, it still signals that we still have some downside to go until we start to see better price action. And I still have my level just below 25 here that I think will be hit sooner than later. And then the big question from there is, do we head down towards 20? One of the things I thought was interesting, and this is just, a lot of people have been talking, and I've even seen you talking about bear markets and how long they last, and, whether or not this is the longest bear market, is it not? But it's interesting just to take the high from 2017, and that was about 364 days. I might be off by a day or two. But if you take the same sort of thing from the high of 2021 to the low, so high to low of the cycle, high to low from the cycle, almost to the day, it's literally on point. Now, if you go back to the earlier cycle and the cycle prior, it was 400 plus days. So it only is intriguing in the last two cycles. This, by the way, doesn't make me think that the cycle's over, the bear market's over, but it is just a fascinating thing to think from peak to trough, it's almost identical in terms of days.
Yeah, I think one way to view this too is that you get your typical bear market year, and you can kind of see it on there as well. But like you have your 2022 bear market year, your and I don't know if you can see my screen here, but I think yeah. So you have your 2022 bear market year, your 2018, and you have your 2014, right? And they all lasted about the same amount of time. But what I'm sort of looking at right now is not sort of this primary bear market year where it's down only. It's sort of the pre-halving year where it's half up and half down. And in this cycle over here, it was the secondary scare led us to a double bottom. In this one here, it led us to a higher low. And remember, this higher low came because the Fed was quick to print. I mean, they printed a lot of money really, really quickly. So yeah, I mean, I think my guess is we're just in this secondary scare where, who knows if it's a higher low, a double bottom, or even a lower low, right? It's really difficult to say. But I think that's kind of where we are right now, where Bitcoin's sort of slowly fading back down. And just like in 2019 and just like in 2015, at some point we likely put in that low for whatever the secondary scare is going to be. And whether whether we fill the gap at what 20K or we go all the way back down to a double bottom or a lower low, I think it's hard to know right now. I do know that historically in more typical recessions, I mean, correct me if I'm wrong, but in typical recessions for the S&P, they're notorious for putting in lower lows.
Yeah.
It's just we haven't really seen one for Bitcoin yet. So I don't it's hard to say what's going to happen. Last time in 2020 we had a recession and it was technically a higher low.
Right.
But it was also, again, the Fed was quick to print. Maybe if the Fed's not as quick to print, maybe we would go lower. But we also talked a little bit about, I mentioned that I thought that we might see 23K sometime in September. That doesn't mean that it has to happen now. And it doesn't have to happen this week, but I put out this tweet and then like the next day we saw Bitcoin rally up to 28K. But what's interesting is that it got rejected right at that 20-week moving average, right? Like that's exactly where the rejection came, right at this sort of this bull market support band idea of, hey, there's not enough juice, there's not enough liquidity in this market to get Bitcoin in a sustained move higher. But then the other thing that I meant to point out last time with regards to 23K being a potential interesting level is 23K is also kind of this macro monthly candle structure, right? So like in January, we closed the month at 23K. February, we closed the month at 23K. And in March, we opened the month, of course, at 23K. So I still think there's some importance of that level. Whether we get sort of like a bit of a bounce off it and then roll over, I don't know. But I still think that 23K is likely coming here in the next few weeks.
Yeah, and it makes sense based on the price action, and price action is always the dominant factor for me. Whatever I think or feel doesn't really matter. It's what the charts are really telling us in the price action. So yeah, I agree that in general you probably look for a move down, and then there'll be bounces along the way because nothing goes straight down, and you have to kind of coax some bulls back on. But in regards to the S&P making lower lows, which is what you mentioned, is part of that is also is when you get a low and you get a significant bounce, much like the October low in the stock market. There's a lot of people that say that is the low of the cycle, and markets have a tendency to want to flush those people out and stop them out, which is you take out that low. And like you said, last time it didn't happen in crypto because the Fed came gangbusters with lots of liquidity, but it's just the nature of it is that bear markets have a tendency to wash out any bullish sentiment. And then once you have no more bull sentiment, there's only buyers left. They only have money on the sidelines where they can come in when things start to improve. But yeah, it wouldn't shock me. I mean, I've been in that camp for a long time that I didn't believe that 15.5, 15.7 is the low. We'll have to see if that's correct or not. We probably will know in the next 12 months.
Well, we should also say too that while Bitcoin didn't put in a new low in March of 2020, most altcoins did.
That's true.
So
very good point.
And actually, I was looking, if you actually look at what happened in 2019, once we sort of made this capitulation below the 20-week, we sort of got, a red candle. And then we had like a candle that sort of wicked up near that 21-week EMA, a little bit more hesitation. And then we got another move up and then we just sort of slowly rolled over. So I'm looking for this potential rollover coming, which I think will likely come in the next few weeks. That's sort of the level that I think sort of corresponds to, our 23K level, right? So coming back to, taking out this prior low, because I think there's a lot of people looking at this chart right now and saying, well, technically speaking, Bitcoin hasn't put in a lower low, right? It hasn't. I mean, it's still, at this point, it's still a higher low, but I would argue that there could be a sort of a case to be made here that Ethereum is showing you there's weakness because Ethereum has already put in a lower low, right? So I think there is some element of like the riskier assets are kind of showing you or showing us where things are likely headed, but it's taken time to get there.
Yeah, I agree. And I'm seeing a couple questions coming out here, a couple good ones too. One of them is on natural gas, and I don't mind just quickly jumping into nat gas if you don't mind, Ben.
Yeah, go ahead.
But basically we've seen oil rip higher. Natural gas has a tendency to kind of lag a little bit. It's more seasonality that drives it, I think, as a laggard to oil. And we're seeing it down today. But one of the things I love showing is there's a little channel developing here, right? You have this trend line here and this one down here, which is parallel. And so basically you're right in that channel. And for me, I'm just watching this pivot. So if you look at, we had the kind of in a weird way, this was a beautiful head and shoulders pattern, right? So if we look here to here and then up to there, head has to be the highest point on the head and shoulders. And then you have the neckline here, and you could see once it broke, I mean, it was just down, 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 down. But we have this significant kind of pivot point right down here, which marks this low. And to me, that's what I'm looking for. So my first spot, for those of you asking about natural gas, I want to see it break $3 essentially. If it gets through $3, you probably get a run to this level around 315 to 320. But to really get that bull move that some of you guys are looking for, it's got to break 320. If it does, could it go to 4 and change? Yeah, it could. There's no doubt about it. But right now you're trading in this slightly upsloping channel on nat gas. And then I saw one other question there. Let me see if I can find it. I thought it was a good one for you, maybe. Um, how long have you been in crypto investing, Ben? How long have you been, since like 2017 or 16 or?
Sorry. No, I mean, I first got interested. I wasn't an investor back then, but I first got interested in it back in, I believe it was 2011, because I was not an investor at the time. I just, I got interested. I was taking a cryptography course. My undergrad was in mathematics. We were taking a cryptography course, and I don't know how. I mean, I don't know how it came up exactly, but if you're taking a math course on cryptography, then it's, and Bitcoin has been around for a couple of years at that point. Somehow it came up, and I learned about it then. Unfortunately, I was a relatively poor college student, and I didn't have, as I say, excess liquidity to just throw into these risky assets. So I didn't really get involved until a cycle after that.
Interesting.
But I mean, I will say, like I've been wrecked in crypto so many times. Like, I feel like it took me so long to sort of become the risk averse investor that I am today. I sometimes see people, they're super bullish on like, certain altcoins, or like so bullish on various aspects of it. I'm like, it's hard for me to, when the altcoin goes down, like I also can kind of like empathize with them, because that was me, like that was me last cycle, or the cycle before that. Like, that was me previously. I feel like we're out here just trying to say, hey guys, we've been wrecked before, like, and it's not fun. And it's better sometimes, like sometimes cash is a position, right? Like, just sitting out and watching what happens for a little bit can be a position to take. And I mean, at least it's less stressful,
What I find fascinating about the dollar narrative, right, is that if during the 2021 bull market in crypto, the big thing was, hey, the dollar is going to collapse, so you got to be in crypto. And yet, intriguingly enough, it was Bitcoin that collapsed, and the dollar actually strengthened along with the rest of crypto collapsing. So it just shows you again, when the crowd believes something's going to happen, it's usually the opposite. And you just want to be aware of that. Like Ben said, I've been wrecked, and I've blown my account up, so many times in my early career. And eventually it becomes like, unfortunately it took me multiple times of doing it. Like, it sounds like you too, Ben, is like, I made the same mistakes multiple times because it took me a while to actually learn. But it's touching the stove enough times, you realize, ouch, that does hurt. And I think also as you get older, and I could be wrong here, I don't want to speak for Ben, but now that I have a family, there's different priorities where it's like, okay, I can't go all into that coin or that stock because I got a responsibility to take care of my family. I need to diversify away, versus when I was single, it's like, oh, well, I'll just make more money, no big deal. Let's try to hit a home run. So yeah, anyways, just a couple tidbits there.
Yeah, like I'm not gonna tell my 4 young kids when they're older, sorry, we don't have anything else. I blew it all, YOLOing into altcoins,
Right. Sorry, Ben, I was going to say, and I don't know if this is the true for you, but that was actually a big turn for me in my investing career, is that once I stopped doing that kind of stuff, I actually started making a lot more money, because I protected the downside essentially.
Yeah, Gareth, maybe because I think that is the key thing, protecting the downside. Like, right. I think there's sort of two ways to look at this right here, right? Like, if you don't buy something and it goes up, you haven't lost money, right? Like, you haven't lost anything. There's the opportunity cost, I suppose, that like you could have made 20% on that something, but there's always going to be something else that's going to go up 20% at some point, right? So I think it's important for people to remember that, if you miss a trade, right? Like, if you don't take a trade and then it goes up, you haven't lost anything. It just means, you were conservative. It didn't meet your conditions. It didn't meet your criteria, and you move and you look for something else. That's a hard thing, I think, for, and again, I still make mistakes, right? I still make mistakes today, and I'm not under the illusion that I don't. But yeah, speaking, I think that we should maybe touch on the Bitcoin dominance a little bit, because right now it's at what, 49% or so. So I will say my general thesis on the dominance for basically the last 2 years now has been that it's just going to put in macro higher lows and higher highs and go to 60%. And of course, today we're looking at it back at 49%. There's a formula on trading, and I have it right here. Let me see if I can pull this up. This is basically an approximation of the dominance, excluding stable coins, but on TradingView. So when you look at it like this, at least to me, it still seems relatively bullish. Like, I mean, I still see a series of higher lows and higher highs. What I also see, even if you include stable coins, sort of going back to that other chart, what I also see is sort of just back testing potentially the breakout point,
Yeah.
just like we did last cycle. And, again, I know it's one of those things that I sort of understand the arguments, sort of the counter arguments, but at the same time, I also would say, in a risk off environment, the more risky assets are going to get hit harder on a longer time frame. And so I still think the dominance is likely going to continue to go up, even if it fades. And I know a day like today, a lot of people don't want to believe that because you can see that it's had a pretty nice pullback here for the last several months, but I still see higher lows.
And I'm in the camp with you on that as well. Like this is actually one of my favorite trade setups, to be honest, where you hammer on this trend line, right? It's a trend line that goes back to 2021, high on Bitcoin dominance, and then over here it just started hammering at it, like chipping away at it. Breaks out. I never buy the breakout, by the way. I'll just be honest with you guys. Like once it's broken out and confirmed, I'm late to the party. I don't chase. And so what I do is I patiently wait for it to retrace to what it's called the scene of the crime, meaning like that was where it broke out. So it comes back to that scene, and then that's where I'm actually a buyer of this. Now, again, what makes me a little concerned is that it doesn't guarantee Bitcoin's going to go up, right? Bitcoin might just go down less than everything else. So it doesn't guarantee buying Bitcoin's going to make you money. But at least if you're forced to choose between alts and Bitcoin, you would choose Bitcoin at that trade level, at that trend line, because it should drop less or go up more.
Well, and under the sort of the idea of Bitcoin goes up for half the year and down for half the year in pre-halving years, my expectation is that the dominance goes up while Bitcoin goes down, right?
Mm-hmm.
Because we spend half the year going up, right? It almost perfectly, in fact, if you think about it, like this move by Bitcoin, it started in January and then it topped out in June, July, right? About halfway through the year. So yeah, I think that, by the way, there's another indicator we can use to sort of gauge this. It's the altcoin season index. And you look at like a 30-day moving average of the altcoin season index. So the green area down here is Bitcoin season. It was going up, but you can actually see that it's starting to roll back over towards Bitcoin season. It's slow to do so, but it is slowly starting to roll back over to Bitcoin season. And imagine a scenario where Bitcoin goes down and we go back into Bitcoin season, just like we were in Bitcoin season when Bitcoin was going up. That, I think, is sort of what brings home the altcoin reckoning.
Yeah, no, I agree with you on that. Now, just quickly, I'm just bringing up a chart here I want to show you and kind of just get you guys on point. This is the KRE, so this is the regional banking ETF. And the reason why I pay attention to it is because with rates where they are, we know that even when they were a little bit lower, we know that Silicon Valley Bank failed and there were other failures. And I wanted to just show this trend line here because this is the lowest point where we had that big collapse when Silicon Valley Bank failed in March. We bottomed out, and then we started to kind of pull back to the line, a little bit of a bounce, again, the line. And then look at what's happened. We've actually broken below it and are actually consolidating below it. And this is actually very, very bearish for the KRE, is that when you see this pattern, it's almost like a bear flag forming, but it's like a bear flag forming where it's forming right below a ceiling. And so the ceiling, think about like Indiana Jones or something, it starts to come in or price just can't get above it. And this can actually signal a drop. So I would just say based on this chart, it's a little bit alarming to me. I don't know if anything big is going to happen within the banking system, but just something that does relate to crypto, does relate to Bitcoin, as we know that when Silicon Valley Bank failed and those other banks failed, we did see a pop in crypto. And I'm not saying that that's going to happen here, but I just look at charts and probabilities. And this in general, when I see this is a short on the banks, not a long.
Also, I was actually curious because last time the banks went down, Bitcoin went up. So do you think there's reason to believe that Bitcoin would go up if the KRE were to go back down?
I think that there is a possibility just because that's what we saw back on Bitcoin, right? So it does make sense, at least in the short term. This was where the banking crisis kind of started, right? So initially, just like with COVID, everything went down. So the first couple of days Bitcoin fell when that crisis was developing because it was panic. Everyone was like freaking out. And then people were like, wait a minute, let's pull our money out of the banks and move it into something that's not fiat controlled, government, whatever. And that's where we saw this move up. So it's just an interesting thought process. And again, it still doesn't mean that I don't think Bitcoin's going to net go down, but there's just something that you want to pay attention there in the banking stocks that could be a little bit of trouble.
It kind of reminds me of this. I think we showed this chart a few months ago. It's basically like the S&P 500 ROI to low after 10-year, 3-month yield curve inversion. And this is the green line is the current cycle, and this orange line is the financial crisis. Like I sort of wondered, is like sort of just like a hypothetical scenario, like if there, and I don't know the answer to this, honestly. Like I could see on it, like I could see the answer going, like I could see the evidence for both reasons, right? But like if something like this were to play out and we had like a banking crisis like we had in the, back in 2008, would Bitcoin rally into that? Like if this were dropping, like if we ended up dropping like we did back over here, would Bitcoin rally into that? Just like when we saw the regional banks dropping off in March, right? We saw Bitcoin rally up as well. So I'm curious, but then the counterpoint to that is if traditional markets are cratering, then the general expectation would be that all risk assets would likely crater. So I guess the question is like maybe that'll be Bitcoin's moment to shine if it's going to, if something like that were to play out, because that would be the sort of one of the cases that was the case for Bitcoin, right? Don't just print money to solve your problems, figure out something else. And so, yeah, I'm curious, like, do you think if we, not just a short-term pullback, right, but if you saw a massive drop in the stock market, does Bitcoin rally out of that depending on the reason, or what do you think?
Yeah, I'm in the camp that initially it's a risk off asset or risk on asset, meaning that people would sell it initially. So I believe that there's a lot of intertwining between assets. So you have the same people that are in Tesla stock, that are in Nvidia stock. They generally have some Bitcoin as well, and maybe some altcoins. And so if you saw some big sell-offs in various areas, margin calls, for instance, I do think it does impact Bitcoin and cryptos overall, especially because we see it as the riskiest assets of all these assets. But I do think out of the ashes, if you will, Bitcoin starts to shine. It's slowly. And I think this is one of the problems with most investors in crypto is that they expect these changes to happen overnight. And just like, the Bitcoin de-dollarization or the de-dollarization talk, I do believe the dollar slowly does not become the reserve currency over the next 10, 15 years. It just doesn't happen overnight, right? It takes a long time. So I think initially the fear and panic of a hard landing, a recession, oh my goodness, how bad is it going to be, probably does take Bitcoin lower, but eventually it kind of starts to gain traction and head back up. What about you?
Yeah, I mean, I feel like crypto is more subject to liquidity than the stock market is. So I would almost, how like normally the stock market drops after rate cuts, like we get rate cuts, the stock market keeps dropping, and then the stock market bottoms oftentimes like on the last rate cut, whatever that ends up being. I almost wonder if Bitcoin would bottom out sooner, just because it's more dependent on liquidity than the stock market is, and we've seen that actually. I mean, what's this indicate? We've looked at total 3, right? And if you just simply overlay net liquidity, it's basically the same chart, it's essentially the same thing. So I'd like to think that, if something like that were to happen, yes, I think initially you're right. Like I think we would see we'd see risk out, like we'd see crypto sell off, but I almost wonder if it would also be very quick to rebound, because remember, the stock market has done very well this year, whereas riskier assets like altcoins and even Bitcoin haven't done. They haven't been holding those levels. Like, the S&P is not that far away from its highs, whereas Bitcoin is clearly very far away from its highs. But yeah, I think once liquidity returns, we'll likely see these riskier assets in the cryptoverse take off. But I don't think we're there yet. I think we're still a few months away at the very least. My guess is we might be there as soon as the end of the year, but it could also bleed into next year as well.
Yeah, no, I agree with you. I think that's kind of, at least in my personal game plan, I'm getting more and more excited to be a buyer of Bitcoin as I see the kind of the negativity sweeping in. And by the way, it doesn't guarantee, and we talked about this on the spaces, doesn't necessarily guarantee a low, but we start getting in that 20,000, 15, even lower, and I'm just going to start accumulating, and I've been mostly sitting on the sidelines, at least on my HODL side. I have kind of like a HODL portfolio, which is pretty bare at this point. And then I have my swing trade portfolio. And my goal is, as we get lower and we get to these points and we see the stock market begin to collapse, I'll be looking to actually more put money to work towards crypto, specifically Bitcoin, than the stock market. Because I think the stock market, if I'm right and we could get a scenario where we even see stagflation, I think the stock market could have a lot of trouble for multiple years. While I do agree with you, I think crypto could shine.
What are you looking? Because I know that you look at some of the shorter term trades than I do. Like, are there anything? And is there anything in the altcoin market that you're currently sort of like piquing your interest? Like, I have noticed that, like things like, I mean, again, I'm still bearish on the altcoin market, but again, in the short term, who knows what happens? Who knows what happens? But like some of these coins, like Avalanche, they're putting in new lows, right?
Yeah.
Polkadot putting in new lows, Algorand putting in new lows. Like, is there any reason to believe there'll be some type of mean reversion anytime soon, or from a
Yeah.
technical perspective?
So I mean, for me at least, and I'll just throw up like this is a chart that I have a small position in right now. It's a very small position, but it's Ripple, right? And so I love these kind of charts where you got this big pop, right? The big pop. We know what the news was. It was a positive news for Ripple. Doesn't mean it can't be reversed on appeal, but essentially you had this channel or this wedge pattern, and you've come right back into that same level. So again, when you're looking at a risk reward scenario, I'd want to see it kind of hold this 47, 48 cent level, but again, any sort of positive news here and this thing pops 60, 70 cents versus the downside. And this isn't something that I would hold into any sort of appeals decision. It's more very shorter term trade. But again, in terms of technical levels, like it's right back to this sideways chop before this big move. And again, if we look at past Ripple kind of price action, again, you came back like here, you were going sideways, you had this pop, you came back to that, and it kind of created another base and popped again before more consolidation. So again, it's all about of how much of your portfolio you dedicate to this stuff. It's not something you put a lot in, like we kind of discussed earlier. That's how you get wrecked. That's how you blow up your accounts. But there are some of these charts that are kind of interesting. And again, just another one here. You have Cardano, which the chart right now is horrendous. It's not a good chart, but we do have this pivot low down here at around 22 cents. And if we retested that, in theory, we should have some sort of support in that range. So we'll have to see. And again, if it comes back into these levels. I see a couple of you guys posting about a few of these things, but yeah, I mean, Solana, we can look at. Solana, I have a level on this as well. It's actually getting a little bit of a pop, but there's a channel on Solana down here just below 17 bucks, upsloping trend line, flat little pivot low. And basically I've said that if we flush to this area, I would jump in on a swing basis long Solana. It looks like it's popping a little today. We'll have to see if that holds up. But yeah, I mean, the long story short is that there's always potential opportunities. It's all about your time horizon. Most investors, they get in and they start moving the goalpost, right? It's like, well, I got 5% on that. Let me get 10. Let me get 20 now. And you get 20. Now give me, and that's where people get into trouble. You really need to have a plan, right? You're getting in at this level. If it doesn't work, know where your exit strategy is. And if it does, what's your target? And when you have that target, stick with it, because I've seen so many people end up losing money when they were up money because they didn't take it off the table.
Yeah, I mean, with XRP, I sort of see both sides to it. Like I remember last cycle, we basically had two peaks that sort of that came in sort of the bear market year and the pre-halving year. And the first peak came at around 80 cents, and then the second peak came at around 50 cents. And it almost seems like it's sort of the reverse this time, where this first peak came at like 50 cents, and then the second peak came at like 80 cents. I do think this structure is slightly different, right? I mean, like this was lower highs. This has been higher highs, but we also saw higher lows over here, and then eventually we broke to the downside, and we broke to the downside in Q3 of 2019. So if XRP fades back down to, let's call it like 41, 42 cents, and it can't get a bounce there, then I think that would spell trouble big time. For XRP if it can't, because you can kind of see it did the same thing over here, right? Like it kind of faded back down to that 30 cents to 31 cents or 33 cents level. We spent about a month there, and then we ended up going below it, and then we back tested it, and then we back tested it again, and then we just kept putting in new lows. So I think that's sort of the risk on something like XRP. Of course, the other view on XRP is it's one of the few altcoins that's in the top 10 that did not put in a new high last cycle.
Right.
So I guess sort of the glass half full approach, the more optimistic view would be to say, well, since it didn't rally as much, maybe it doesn't have to dump as hard.
Yeah.
The pessimistic view is, well, if it can't put in a new high when the Fed prints $6 trillion, what's going to make it put in a new high?
Right.
So yeah,
And
I definitely see both sides to it, but yeah, right now it sort of seems like it's slowly fading back into that 40 cents, 45 cents level. But yeah, in the short
yeah.
term, maybe you're
Well,
right, and we get a short term pop.
and I think that's the point, is that like a lot of people, I see some comments like, oh, I hate Ripple, or oh, to this, or like, I'm totally agnostic. Like, I couldn't give a shit, frankly. Like,
Right.
I don't love anything, I don't hate anything. I'm in it for it to pay me, and I get out. And I think that's so important, especially when it comes to crypto or stocks. Even I'm the same way with stocks. Like, I don't give a crap about Tesla, Nvidia, Apple. Like, I couldn't care less, right? I use their products to benefit my life and my family's life and my friends, and I do it the same way when you're trading. And I think, I mean, there's a difference between longer term investing versus shorter term. You can't have emotion. The second I see someone saying, "Oh, I hate that," to me it screams you can't be a short term investor, because you're going to let that emotion come into play. And so always remember that, folks out there, is that you want to use it for your benefit and your family's benefit. Don't ever fall in love with it. I always say this: there were so many investors in 2021 that fell in love with Tesla, right? Oh, Elon Musk, he's a god, he's this, he's that. And I'm like, dude, only love things that can love you back. Your wife, your kids, your pet, maybe. But Elon Musk is not sitting there and saying, oh, Johnny really loves me and my stock, so let me not do something that will benefit the company or me. He's going to do what he's got to do for him, right? So
Right.
always remember that it's a static investing rule that should never change. Never fall in love, guys. Never fall in love, never hate. It's just there for your use.
Sort of goes in line with the theory or thesis of don't marry an altcoin.
Yep.
People get overly attached to these things, and it's like a lot of times the founders are actually selling at the top,
Yeah,
or maybe they're causing the top.
that's
Um,
right.
and there's a lot of times where that happens. I think another thing too is like if you make an investment and it goes up 100% or 1,000% over a long time period, do you care if it was because you held investment A over investment B? No, you care that you
Right.
made money, right? So I think that is the important thing to sort of take away from this, is that I mean, fundamentally over the long haul, I do like Bitcoin more than the altcoin market, but that doesn't mean that I'm going to sit by and not try to make money in the altcoin market, because I recognize that while Bitcoin stands the test of time, there are a lot of altcoins that do like to give oversized gains in bull markets. And I'm not going to sort of view it as oh, I'm anti-Bitcoin if I decide to go out and buy an altcoin in 3 to 6 months. No, you can still like Bitcoin, but also recognize there's opportunities elsewhere. It's like, anyone who really likes Apple, a lot of them also have positions in other companies as well, right? They'll have a position in Amazon and Google and Microsoft. It doesn't mean that they think anything less of Apple. It's just they want to be diversified and sort of capture gains elsewhere.
But yeah,
Gareth,
and the
should we
same
wrap
thing.
up?
Yeah. Let's wrap it up. One more thing, and I think what you just said is so important. Is that you talk to Warren Buffett, he's not going to be like, oh my god, I love Apple, and like he's looking at facts. And I think what you're doing is the same thing with Bitcoin, right? It's like, what are the facts? Well, it's got a stated run of 21 million. Like, there's multiple reasons why Bitcoin stands out. It's the most accepted out there. Institutions are interested in it, right? So those are facts and reasons to buy. It's essentially a thesis, like, oh, I just love it, or oh, I think they're, anything like this. Those aren't necessarily factors that we should be abiding by. So I think that's a great place to leave it, Ben. And I think, yeah, man, it's always a pleasure. I hope you feel better.
Yeah. By the way,
Never
guys,
fun
if
to do so.
you're not subscribed to Gareth, just make sure you go subscribe to him. Links to all his socials are down below, including his website, In the Money Stocks. Make sure you give him a follow. And again, apologies that we did not do this on Monday. That was my fault, not Gareth's. I was just traveling with the kids and the family, and I was just unable to make it.
Yeah, Ben, and same thing, guys. Follow Ben. He's amazing, man. His data analysis and stuff. I've seen everything he offers to subscribers. It's freaking amazing, the data he puts together for you guys. So check him out. Follow him on YouTube and Twitter, and we'll be back next Monday at 11 a.m. nice and sharp, and we'll get into some good chart action. So have a great rest of your day, guys. Thanks again for tuning in. We really appreciate it. Take care.
See you guys.